Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. It is a great day, and especially because we have a repeat guest with us. Tim Lyons is coming back all the way from episode 64 back in 2020. I know that is everybody's favorite episode, so this is going to be another banger. Tim is a New York City Fire Department lieutenant in Queens, and he is still in the fire department. And also an investor. He is focused on capital raising now with Cityside Capital. I don't want to tell his full story. So, Tim, thank you very much for hopping on the show again.
Gabe, it's great to be back with you. And you're right. Everybody remembers episode 64 back in the day. And I had all intentions of re-listening to that episode just to kind of hear the transformation that has occurred for myself and my business from then until now. But that's going to have to wait till after this recording.
Yeah. I mean, that's almost 3 years ago. So that I'm sure a lot has changed in 3 years. We're going to get into it here. So really quick for people who, had the misfortune of not listening to 64, tell us give us your background. What is your story? How'd you get started in real estate?
Yeah, so simply, listen, I was the everyday guy, right? I was Tim the firefighter, Tim the ER nurse. ER nurse was my side hustle. I went back to nursing school after I was already a firefighter because everybody had a side gig, and I'm not very handy with tools, surprisingly. So a lot of people are like, contractors and roofers and plumbers and electricians, and I'm just not cut out for that. So I was, pre-med for about 15 minutes in college. So I said, you know what? I like this emergency medicine stuff. Let me go back to nursing school. And I worked with a bunch of nurses. So they always had the side gigs. They drove the nice cars. Their wives didn't work. So I'm like, you know what? Let me do that. And it was great, right? I mean, my wife got to stay home we have 3 little girls, 12, 9, and 4. So she stayed home for a few years in the beginning. And, life was good, right? Bills were paid. 401, we have a 457, was being contributed to, 2 vacations a year maybe. And, really not a whole lot to complain about. But there was a burning desire to do and have more. I just felt like I was on the hamster wheel, even though I love what I did, I still love being a New York City firefighter. I'm going in tonight and I can't wait to get there. And, but when you start having kids, when I started having kids, when they're little and they can't talk back, you can justify working 80, 90, 100 hours a week sometimes with the overtime or extra shifts or, because you're trying to, I told myself I'm trying to make more money. I'm trying to, support my family and I'm trying to do the right thing. And then, you when the kids get a little older and they can talk back and they can, cry and be like, dude, where are you going? Like you literally just got home from a 24 and now you're leaving for a 12-hour shift in the ER. It was a lot. Right. And I knew something had to change. So I was in my mid 30s and, I basically boiled it down to, long story short, boiled it down to buying a business or starting a business and or investing in real estate. And that's kind of the origin story of me getting involved in real estate.
Yeah, I'm sure a ton of people out there can relate to that story. Having kids and then realizing, well, shit, I need to find a way to spend more time with them. I need to find a way, even if you do love your job, and it sounds like you do, sometimes you just want to have the freedom to be able to choose where you spend your time, be it at your job or elsewhere with your family. So I'm glad you made it to where you are today. It sounds like you've kind of reached the point to where you can make that decision. And we just talked before you got onto this podcast, you are 20 months away from retirement.
Yeah. So when I got onto the New York City Fire Department back in May of 2005, I was still under the pension system where you could work 20 years and get a pension and, benefits and stuff like that, which is a big reason why people take that job, right? And it's a lot different today for the new hires. But yeah, I mean, so Been blessed and grateful to have a long career, a healthy career for the most part, and if I can take that and bid adieu to that chapter of my life and go really into my new passion, which is real estate and finance and investing and helping other folks along the journey as well. I mean, that's what I'm hoping to do.
Awesome. Well, congratulations to that. So let's talk a little bit about your real estate career. You've had great success. Get me up to speed. It's been 3 years since we talked last. What have you guys been doing? And so when the last time we talked, you were focused on multifamily investment. You guys were doing, I think you were doing flips of multifamily repositioning. So where have you gone since then?
Yeah. So got started with a 3 unit and I self-managed and I bought that with a partner. I was scared to death. I didn't know what I didn't know. I'm not very handy, as we talked about. But I wanted that experience and I held on to that property for 2 years. We bought that in November of 19. Very quickly realized that I hated being a landlord. I wanted to scale up, buying 100 to 120-year-old three family wood frame houses probably wasn't the best and highest and best use of my capital because of deferred maintenance and all the other things that come along with it. So I kept on hearing about multifamily. Ended up getting into a mentorship program for multifamily.
And that was the Jake and Gino one, right?
Jake and Gino, correct. And did that March of 2000, like the first week in March. And the second week of March, we were going to flatten the curve for 2 weeks by staying indoors. And all of a sudden, I'm doing homeschool and Zoom classes, and it was a complete disaster. And I just paid $25,000 to be mentored. And I'm like, holy cow, what's going to go on? Anyway, really leaned into the process, spent a ton of time in those beginning dark days of just educating myself, making the phone calls, connecting with people, Zoom calls, the whole nine. And I was able to partner with my coach on a 43 unit in Pennsylvania, right? Not the sexiest of locations, I guess, as far as investing, but you know what? Had the opportunity of a lifetime to get the front row seat behind behind the scenes view of how does a real estate syndication work, or a group investment, and I was hooked. So did 3 deals by partnering with folks in that community, and really came to the realization that real estate investing in general, especially commercial, is a team sport, right? And everybody has their strengths and weaknesses, and the sum is, all the parts that make up the sum, right? And like everybody who can bring their strengths to the table, that's how deals work, and that's how success is made. And that's what I came to realize. I knew that I wasn't picking up my family and moving to Phoenix or Austin, Texas, or Tampa, Florida, or Nashville, Tennessee. Just as much as I would love to go to those places, I wasn't moving. I wasn't a particularly great underwriter, right? I just learned the business. I had no contracting skills, as we've talked about ad nauseum today. And so what could I do? I mean, I could raise capital, and I actually really enjoyed that process. I enjoyed raising capital. I enjoyed talking with investors who at the time were basically just friends, family, college roommates, colleagues, stuff like that. Because I was just getting started, right? No one knew me as, the investor. So, so as I went through that process, Gabe, as being an investor or just living life, it's an iteration process, right? You figure out what works and you do it. You figure out what doesn't work and you stay away from it. So when it came to capital raising, I dove in headfirst and realized that there's a lot of laws and rules and regulations with FINRA and the SEC about how to legally raise capital for real estate opportunities. And most of the rules are, basically predicated on Regulation D, exemption for securities filings, and using 2 vehicles called the 506B and a 506C offering. So the more I went down this, the more I realized that you really have to know what you're doing, right? And with that, you have to have a material participation in the operation of that property, or the groups of properties, or the funds. And you can't just raise capital, don't get paid for it, and move on to the next deal, right? So I in my mentorship, I got introduced to a broker dealer. that was focused on commercial offerings, commercial real estate offerings through private placements using the Reg D exemption, 506B and C. And it was exactly what I was looking for. It kind of fell into my lap. So my brother Greg and I, who's my partner at Cityside Capital, after doing our due diligence and our, looking at the pros and cons of getting licensed and working with a broker dealer and versus doing our own thing and, trying to find our own deals and run our own deals and do all that, we decided that, since I was a firefighter full time and Greg is a director of real estate for a company down in Virginia, it really made sense, right? It made sense for us to lean into our strengths and stay in the capital raising space and get licensed to do so and work with, a broker dealer. So I'll pause and I'll throw it back to you. I'm sure you got a ton of questions and we can unpack any of that.
Nice, man. Yeah, no, I'm glad you came on today, because this is something I know very, very little about. The deals that I've done so far, I've done kind of as JVs. So I brought on, one or two partners, capital partners to close my deals. So I know nothing about syndications in terms of like the 506B and C and all that jazz. And I didn't even know you could get licensed. So let's start there. Licensing, I didn't realize that was a thing when it came to creating, or I don't know. You tell me, what does the license do? What does it provide? And what is the use of it when you're in terms of a syndication?
Yeah. So the licenses are depending on broker dealers, they have different preferences for what licenses you should have.
And
generally speaking,
I'm going to jump in there real quick. So you said broker dealer. Is that what are they brokering? Are you talking about like a real estate broker that's brokering like the sale of properties, or they're brokering securities?
Yeah, so it's basically securities, right? So broker dealer, if you picture Goldman Sachs, JP Morgan, TD Ameritrade, those types of organizations, they're usually a broker dealer, and that just means that they buy and sell securities on, for themselves or for their investors, right? That's like the definition of a broker dealer. You can buy and sell securities for your benefit or the benefit of others,
and it could be like stocks or.
And usually it is stocks, bonds, ETFs, treasuries, options, that whole Wall Street type of menu of options they're all done by broker dealers, right? The broker dealer that I work with is specifically focused, or I should say solely focused on private placement investment opportunities in the commercial real estate space. So we don't do ETFs, we don't do stocks, bonds, mutual funds, we don't do any of that stuff. We just do, multifamily. At this time, we do multifamily, self-storage, and industrial, investment opportunities. So to be affiliated with a broker dealer and to, use this kind of method of raising capital, you have to have, certain licenses. And there's 3 exams. The first one anyone can take, it's called the Securities Industries Essentials exam, or the SIE. And most people will take that to kind of show that they're interested, right? And they'll be able to talk to a broker dealer and say, hey, I got my SIE exam already taken, I'd like to, be affiliated with your broker dealer. And the broker dealer then has to sponsor you for the next 2 exams. For us, that was the Series 82, which had to do with private placements and, securities of that nature, and the 63, which was the uniformed securities rules and regulations. Excuse me. So other broker dealers that I've come into contact with, instead of the 82, they will have their people take the 22. So it's just a broker dealer preference. So once you have those exams, right, you get sponsored for the Series 82 and Series 63. Now you can affiliate yourself with a broker dealer as what's called a registered representative. And look, it's a little different than, you're in the end, you're raising capital. It's a little different, right? We have to abide by way more compliance, suitability clauses. We have to make sure that the issuers or the operators are suitable for our investors. We have to make sure that the investors are suitable for the private placement type of investments, right? That this is not their last 50,000 or they're only 50,000. Accredited, non-accredited, right? There's all that kind of goes into it. So, and look, the question I get all the time is, well, why do operators need your money? And the answer is, look, operators can raise, depending on, if they're experienced or not, they can raise millions, tens of millions by themselves. But if they have a couple of deals going on at the same time, or they have constant deal flow, eventually their investor base will either get tapped out, or it's harder for them to spend time and resources, with their investor relations team, and they'd rather outsource that, or just have a partner like us to be able to lean on for equity for deals. So, let me throw it back to you.
Yeah, no, that makes sense. I mean, I knew the general understanding of how syndications work in terms of raising capital. I didn't realize you can get a license, so that's good to know. In terms of structuring, so when you guys raise capital for a GP, how does that deal generally structured? Like, what percentage of the equity goes to the capital raisers? What goes to the limited partners? What goes to the GP? All that kind of stuff.
Yeah, so the cost of capital that we bring to a deal is really, it's baked into the deal, but it's really on the general partnership side. So I get that question all the time, like, well, how much do you guys cost, right? And if I'm a limited partner and I want to invest 50,000 into a deal, right? All 50,000 is going into that. All 50,000 of those dollars are going to be on the equity side for that limited partner, right? It's on the general partnership side. It's their cost of equity that they pay us out of, right? So all the deals that we do are basically 70-30 splits. 70% goes to the limited partnership or the passive investors, and 30% goes to the general partners or the issuer or the operator, however you want to define them. And out of that 30% is where our carry comes from, and our fees upon bringing capital into the deal. Now, on the flip side, we can only work with my broker dealer. We can only work with the operators that have been fully vetted through our 6 to 8 week process. There's a cost associated with that. There's site visits. There's due diligence. We have a third-party due diligence firm. We have an in-house underwriter. So there's a whole process to go through before we say, yeah, we want to work with you going into the future and build that relationship. So we don't do one-off deals with operators. We don't do deals where people call us. I get 5 to 10 calls a week saying, "Hey Tim, I heard you're a capital raiser, and we have a need for 17 million, and we're closing next Friday, and we're short by 3. Can you help us?" And while it might be a screaming deal, it might be a deal of a lifetime. Unfortunately, that's not how it works. It's more of a longer term play. We really pick and choose who we want to work with very closely. And that's kind of how we qualify the operators and their deals.
Nice. Yeah, that makes a lot of sense. So 70% LP, 30% GP, and then out of that 30%, what is the split between the operators and the capital raisers?
So, so it's generally speaking, we get paid for the capital that we bring into the deal, right? So there's really no cookie cutter answer for, like, if you bring this amount, you get this. If you bring that amount, you get this. It's just all one agreed upon fee. So usually we're somewhere in the ballpark of, say, 10% of capital that we bring into the deal is our carry on the back end. So that just has to fit into the 30% of the GP.
Gotcha. Yeah, that makes sense.
So it's basically, it's all due to how much money we bring into the deal. So it's not really percentage wise. It's basically on the number that we bring into the deal.
Cool. Yeah, no, that makes a lot of sense. So when you guys raise capital, you go out there, you meet with people, you get them to commit their capital for deals that you bring in through your connections. What for somebody out there who is a GP who wants to find capital raisers to partner with, what is the suggestions that you give them? What do you look for in your partners? All that kind of stuff.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Look, generally speaking, we're looking for people with experience, right? It's no secret that we're recording this, September of 23. There's clickbait in the news, commercial real estate is going to be crushed. There's a tidal wave coming. And, listen, to a certain extent, that is, certainly a consideration of what's going on with the high interest rate environment and the rolling over of debt and all that good stuff. So we want people who maybe have a little gray hair, right? They've been through a market cycle or two. They've had they've had a couple of full cycle opportunities, meaning that they bought a property, they implemented a business plan, they financed it correctly, they ran it correctly, and they're able to produce results on the other end for themselves and their limited partners. People who are just starting out, or people just went to a weekend conference and they want to call themselves a syndicator and have access to, big equity out of the gate, is not somebody that we're, at this point looking to work with, right? So that's really, and then secondarily, markets, right? We have certain operators that we have now had strategic relationships with and been working with them in certain markets. So we don't want to oversaturate a market. For example, we already have people in DFW, right? So Dallas Fort Worth. So if somebody comes to us and say, "Hey, we're a Dallas Fort Worth operator," we're not trying to fit too many players into the same sandbox, because we feel that there'll be undue competition, and that may not work out well on the other end for our investors, right? So we try to spread out and diversify operators across the markets that we are looking to invest in, and also along the same vein, the different asset classes. Right now, it's only 3 that we work with: multifamily, self-storage, and industrial triple net leases.
Nice. Let's talk about the assets. When I originally spoke with you, you were only in multifamily. Since you've picked up industrial and self-storage. Self-storage is my bread and butter. It's the one I love. Why'd you guys jump into the self-storage? Have you closed any deals recently? What's happened on that front?
Yeah, so we work with a very large self-storage provider. I think they're the 17th or 18th largest provider in the country. And they use a fund model. So we've done 2 of their funds. So we've raised capital into the fund structure, which has anywhere from, say, 18 to 32 or 33 properties in each fund. And they also work within the fund with a private equity group that is also another capital partner. So there's a strategic alliance with these groups that we have worked with in the self-storage space. And the reason why is we believe in the investing thesis of self-storage. As I'm sure you're aware, 70% of the self-storage businesses in America are run by mom and pops, and the other 30% are the big box, are with the retail, then they're owned by the REITs, the big REITs. So like Store It and U-Haul and stuff like that. Those are all run by REITs. So there's a tremendous amount of opportunity out there to buy a self-storage facility that has some sort of value add component. So we look for buildable space on the land. So can we add 10,000 square feet, 12,000 square feet of space? Can we add refrigerated or climate controlled space? Can we do boat and RV storage, depending on what part of the country we're in? So there has to be some sort of value add play, and along with the mom and pop owner that maybe just got really comfortable, doesn't have much debt, doesn't raise the rents very much, if at all. So there's different ways to grow that NOI, and we look to bundle that into the fund over, say, a 3 to 6 year hold, and sell off to an institution or somebody who's looking for not a value add per se, but a stable cash flow business.
Yeah. All right. It looks like we have run down the clock, but before we move on, you said refrigerated, and that kind of piqued my interest. I have heard of people adding refrigerated units to self-storage facilities. Never done it myself. I've never even looked at a facility that had refrigerated within it. In terms of demand, do you see a lot of demand for refrigerated units? And then also, what is I know there's a lot more in construction costs that goes into creating refrigerated units, but is the upside in terms of what you can rent those units out for? Is it pretty substantial? Or give me some of your knowledge about refrigerated units for self-storage.
So in all like full disclosure, I meant to say climate controlled instead of
Okay.
refrigerated. I meant to say climate controlled, but
Right.
to that end though, right? Like, in the southeast United States, it's hot, it's humid, it's there's a lot. If people have a boat or people have a huge, I want to call it a RV, the camper, a big camper, those things they want them indoors, right? So a lot of times they don't want the sun beating down on them. They don't want the elements, beating down on them, the rubber seals, the windows, the tires, right? So they want them indoors in a climate controlled, environment, or even just like computer equipment or electronics and stuff like that. Like, there's a huge demand for not just a shed out in the blazing heat, or the freezing cold, right, depending on where you are in the country, but to have stuff that you really truly care about, you want to have it in a climate controlled facility.
Yeah.
So that's really what I was
Yeah.
talking about.
Yeah, climate controlled. That's there are refrigerated units that have gone up near me here in Tacoma, and I've always driven by them, and I'm like, I wonder what the thesis is on those guys, because who uses them? Like, it's the only thing I can think of is giant grocery stores, but who knows?
I'm thinking
Climate
meat
controlled,
locker, right?
yeah,
Yeah,
that's a different beast there. All right, man. So we went through the clock. It looks like it's time to jump into the quick question round. Are you ready?
let's do it.
Let's do it. Starts with books or any form of education. Give me two recommendations. One for general life wisdom, one for real estate specific.
The Wealthy Gardener, for General Life Wisdom by John Sofuric, I think it is the way you say it. It's one of those books that I listen to once a year on Audible now. I read it. I couldn't put it down. And it's a parable / real life story about investing, about life's lessons. It's a fantastic book.
Nice.
The second one.
Yeah, keep going.
The second one for real estate. The way I got started, and it sounds probably pretty cliche, is Rich Dad Poor Dad. But people read that and then they say either they get it or they don't. It's more of a framework, so that you really need to follow that book up with his second one, which is called the Cash Flow Quadrant, which is more of a actionable, strategic, hands-on type of approach. So I would say together, Rich Dad Poor Dad followed very closely by the Cash Flow Quadrant.
Nice. Yep. Great suggestions. And I just pulled up The Wealthy Gardener on Amazon. I'm definitely gonna have to buy that. I love like kind of The Alchemist, The Way of the Peaceful Warrior, those kind of books where it's a story that gives some wisdom. It sounds like a good one. So thanks for the recommendation. Moving on to the next question, and this is for your younger self. So let's go back to the Tim who was just doing his first overnight as a New York City Fire Department lieutenant. Go back to him, look him in the eye, give him one piece of advice moving forward.
Wow. One piece of advice for the brand new firefighter or the brand new lieutenant?
Let's go brand new firefighter, right when you got started.
Brand new firefighter. I would tell him to relax. I was nervous. I think I'm still nervous, right? Going to a fire. We went to a blazing third alarm the other night. I was still nervous, right? I've been doing it 18 years. But you know what? I would tell him to relax, to lean on the team, and trust the process. Our training carries us through in times of, craziness. So, take a deep breath.
Nice. I feel like that's good advice, not only for firefighters, but for just pretty much anybody doing anything out there. So many times when you're going into a new event, a new experience, it's pretty easy to get wound up. So if you can just take a breath and relax, trust you'll be able to get through it. It's good advice for anybody. Moves us to the next question, and this is for your business. The first three positions we hire form the foundation of our business. So what were they for you, and would you do it differently in a different order if you did it again today?
Well, I really hope my brother Greg listens to this, because I started this journey, and then I lovingly let him on to the managing partnership of Cityside Capital. So he was really my first guy. But look, we've hired several virtual assistants. Because when you're getting started, capital is an issue, right? Revenue is an issue. But we've been able to find some really great help for like website marketing and email automations and Zapier, all things that I don't have time to and I still don't understand. And but I know I can conceptualize it. So I would highly recommend a great VA or a team of VAs. so much in sales is talking to people. So if I'm going to hire, we're actually going to hire our first person who's not family, in the next month, and it's a Wall Street veteran. I'm super excited to roll him out in the next couple of weeks. But it's talking to people. So sales, talking to people and getting them comfortable and understanding their needs and solving their problems. I mean, that is the lifeblood of any kind of business, is solving people's problems. And when you can do that, you can be very successful. And the final one is marketing, right? If nobody knows what you're doing or where to find you, then you're not going to have a sustainable business model. So sales, marketing, and if you got a brother out there that you like, you can bring him along as well.
There you go. All right, next question is about the U.S. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Oh, man. So my gut first went to the west coast of Florida. We're just finding a lot of great opportunities, and we have some successful projects there. But I'm really going to pivot to a non-traditional space, which is the east coast of Michigan, right into Ohio. We have an operator up there that is just fantastic to work with. They're really a strong, vertically integrated operator in a non-sexy market that's just really, adding value, creating cash flow, very low leverage. I mean, it's a really great operator. So that's the market that I'm most excited about going forward right now.
You are the first person to say anywhere in Michigan. So there you go.
I knew it. I was.
All right. This next question is generally, how do you find good deals? What's your favorite way to find good deals? But I'm going to change it for you guys. What is your favorite way to connect with new investors?
I love podcasting. We have our own podcast called the Passive Income Brothers Podcast, and it has become a labor of love. I mean, I love it so much. I could do it all day long. So that's really the best way, because, we are connecting with real people, hearing great stories, being constantly inspired. And listen, Gabe, I don't know if you feel like this as a podcast host, but I still suffer from what's called imposter syndrome. I still, I really had to work on myself and my personal growth and development, that I'm an investor, that I have a private equity company, that I'm a podcast host, because at the end of the day, I still feel like I'm unworthy for some reason sometimes. And I feel like I'm Tim the fireman, Tim the ER nurse, which is still a great person to be. Yeah, I mean, I don't know if that answered the question, but
no, I totally associate with that. It's really, everybody I feel like has those feelings of, even when you've made it, when you've done good deals, when you're running a podcast, you still feel like you're not that person, but when you're doing it, you are. Action really speaks louder than words there. Man, I love podcasting too, so I totally feel you. It's a blast. It's great to meet with people, connect with people like yourself. All good things. Moving us on to. I lost my spot. I do this every time. I feel like I should start counting how many times I lose my spot on my sheet.
Well, it's probably because I'm giving you long-winded answers to your short answer round. So I apologize.
It's all good. All right. This one is about your strengths. We're all gifted with strengths that we uniquely provide this world. So what is your Superman strength?
I think it's breaking down some of the more complex investment terms and features, and really kind of giving it back to investors in an everyday language, right? Like Joe the plumber back in, the old election cycle, right? Tim the fireman, Tim the ER nurse. Like, I get that question all the time, dude, how do you know so much about this? Like, you could just talk about this all day long. And it's because it's my passion. It works for me. It worked for my family. Am I where I want to be with my passive income? No. I'm always working towards a new goal in life, but it's powerful stuff. And I just love to be able to break these concepts down and bring them to the regular folks out there who I think need to hear the message.
Perfect. And that leads us right into the last question. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What do you guys offer, and where can people find you?
Well, thank you for the opportunity, Gabe, to do this. So they can find us in a multitude of ways. You can go to our website, citysidecap.com. You can find me or my brother Greg Lyons or Tim Lyons on all the major social media channels. We have a podcast, like I talked about, the Passive Income Brothers podcast, as well as our YouTube channel, which is Cityside Capital. And if that all fails, you could just email me, tim@citysidecap.com.
Perfect. You guys also have a book, right? Did I read that somewhere? Oh no, yeah,
Yes.
Tim's
So
chapter from the Amazon's #1 bestseller book. Which one is that?
So the book is called Bringing Value, Solving Problems, and Leaving a Legacy. And I was in a mastermind a couple of years ago, and they convinced me to write my story in a chapter in an Amazon, what ended up being an #1 Amazon bestseller. So I have the physical copy. I have about 1,400 of them in my garage. So I'd be happy to send you a copy, a physical copy. And that's going to be an email to tim@citysidecap.com, or I do have the links I can send you for the electronic version.
Perfect. I will put those links in the show notes. So if y'all want to reach out to Tim, just click the little more in the description. It'll pull down that full description. In there, you can find those links. All right, Tim, that wraps it up. Again, thank you very much for hopping on the show again.
Thank you, Gabe. Have a great day.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, with realestateInvestingClub.com. And if you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.